Adaptive moving average has been one of our favorite strategies for a long time. It captured Friday's trade really well. What is the longer term performance of this strategy? Let's take a look here. You see the equity curve has some really sharp run-ups. This did really well for us in March through May when we traded it, and it's drawn down since then. It can have significant drawdowns, and it could be a good time to trade this again. If you see it pulled back here, kind of a slow recovery, then it accelerated. So same thing, pull back here, slow recovery, and then maybe accelerates. It does well in choppy markets, and it can also do well in trendy markets, those gap continuation days. But I have come up with a different version of this to improve it using the advanced decline line. We are big fans of the market internals. Here is gap adaptive moving average 2023. The new setup doesn't do as well on Friday as the original setup, but overall it does really well. Since this is going back to 2009, that previous equity curve this goes back to 2007. The previous equity curve did as well. With $25 round turn slippage and commission, $173,487, $23,000 max drawdown, $107 average trade profit. Really nice equity curve. The worst case drawdown is back here, and so since this time frame, the drawdown is much less since December of 2008. And let's look again at the original version to compare. So these simple filters cut the number of trades in about half. Total number of trades was 1,600 in the new version, almost 3,200 in the existing version, with the total net profit about the same. The average trade net profit is cut in half because the total net profit is about the same on twice as many trades as the original version has twice as many trades as the new version. The drawdown is higher. The equity curve is choppier. Again, these are with $25 round turn slippage and commission. And so looking at that old version, look at the new version as well. And I put the new version in the portfolio calculator. All Strategy Access subscribers will get that. If that's added to the Stock Index portfolio, Stock Index portfolio subscribers will get it as well. It's a day trade strategy on 15-minute charts for the E-mini S&P, and I wanted to share with you because you don't really see a strategy with such simple rules really improve a strategy this much. Let's look at it once again. I want to look at the worst case drawdown going back to December 2008, so I'm going to pause the video and set it to that time frame. So if you go back to December 2008, the drawdown is much less, and you see worst case drawdown 150 instead of 23,000. Average trade profit is 133, pretty good. The long trades are 103. The short trades are 78. The average trade profit is a little higher on the short side, so pretty good balance. 541 shorts versus 822 longs makes sense in this kind of environment. I'm excited about this advanced decline line rule that really improved this. I also used it in gap continuation 2023 to really improve that as well. It provides a lot of consistency, so more on that, but this is the latest on Adaptive Moving Average 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.